Hey everybody, Preston Brent here with our Trader User Group, a weekly roundup. This is for the trading week ending August 5th, 2016. We've had a really great run since June, coming off of the end of June run where we were moving off. You can see on the chart here what I've got on the screen is the E-mini S&P 500 futures. I'm using my eSignal platform right now. It's a little bit of a different screen view from what you're normally seeing. I'm traveling through Europe. I just left Zurich and I'm heading over to Vienna. Lovely places, both of them. Doing some financial seminars. They love trading currencies over here, so that's a little bit about where I'm spending some time here. And then I'm gonna spend another 3 or 4 weeks over in Europe. Then I'm coming back to the United States. But be that as it may, we've just had this huge run off the lows here, as you can see. Let me take it out to a weekly chart here just real quick. Just wanted to show you guys something. Now, I've been saying here for quite some time that we're probably going to run up around the 2200 level. In fact, I'm going to leave these on my screen for a minute, and then I'm going to clear the screen off. But you can see on my chart here, I've got a lot of price levels that I'm showing on the screen here. Let me just choose a pen color here that you guys can see, I guess, on the chart. So if you look at the screen right here, you can see we had a 3-leg right here. We had Elliott Wave 4 and an Elliott Wave 5. We've taken out the highs of the previous pivot highs on this weekly chart. Now, this was what took us so long to take out back in the summer, May of 2015. And we just never could do it. And then finally on this bar right here, we took it out and then we raced up. I was calling right up in here from a timing perspective and from a price level perspective, 2200 as where we're going to be reaching the end of this Elliott Wave 5. And typically at the end of an Elliott Wave 5, you go into an ABC pattern like that. So you get a little bit of a chop. And then depending on where these pivot points are located in the ABC pattern or this chop pattern is going to help kind of determine, are we going to be heading up or are we going to be heading down? But I've been telling our folks, even down in this area down here, that, you know, this seems to be a probable area where we're going to go to. And it didn't seem plausible when we were below the opening price of 2016 of 2037.75, but that's kind of where we were. Also, you can see these, and let me just clear the screen up here for you, just make it a little bit easier for you to see. You can see these black bars right here. These black bars represent, you know, when you're measuring, there is time and distance. Distance is how far up or how far down you're going to go, and then there's a timing element when you look across. How long is it going to take you to get there? These timing elements right here are based more on Gann principles than Fibonacci, although Fibonacci does have time principles. But let's just say a combination of Fibonacci and Gann kind of give us a timing and a price level. And again, price level around 2200. Now, does that mean we're going to hit 2200 and then stop? No, obviously not. But it does mean that that is the higher probability move at this point in time. If I were to take everything off the screen here, so let me just clear the screen up for you just a little bit. So you can see here on this move here, we finally took out the prior pivot highs on this weekly chart. I mean, it took a long time to take this out, okay? That was the prior highs that we made. Again, we're staying on the weekly chart for a minute. And then we had this low right here and then a higher low here, and then we did a test here, a little bit lower low. We had absolutely no bullish divergence. So that told me that any up move here is going to be very choppy, and we're probably not going to be able to take that line out. And we didn't until we finally came down here in this area here. We kind of had a confirming low, and then boom, we bounced up. And remember, off of these lows here, on a daily chart, we did have some great signals to get long, and we were getting long down in this area here. And right around then was when I said, okay, 2200 seems to be an area where we're going to hit. Now, keep in mind, we were below 1900 down here. So, you know, you're looking at about a 300-point move. And when we were down in these levels, it just did not seem plausible. But that seemed to be what the weekly chart was suggesting, that we're going to move up and create this Elliott Wave 5, take out that prior pivot high over here. And that's pretty much how this chart has played out. Again, that didn't say that was what was going to happen. It just said that was the higher probability move. Okay. Now that we're coming up to these levels up here, if we come back in, and let's just go back to a daily chart here for a second. We had some numbers come out Friday. We had unemployment numbers, employment rate. All the numbers were very strong, and there was a belief in the markets that, you know, good economic data was going to be bad for price action because it puts the fear in the markets that the Feds are going to be forced to raise their rates. Well, quite frankly, the markets have discounted the Feds so much and do not believe them to the extent that even with good economic data, the markets are just basically brushing off the fact that the Feds are going to raise the rates in 2016. Now, the probability, according to the 30-day Fed Fund futures, jumped up to 43% before the end of the year. But even that is under 50-50, and you're looking at a Fed that just does not want to do anything, and it seems to be a little bit more politically driven now. So I don't see them raising the rates clearly next month in September. And then we got the presidential elections. It's silly season for us in November, and then we've got December. So if they do raise the rates, I could see the markets pricing in a rate hike in December after the elections have done, after a new president has already been decided. If they do raise the rates next month or November, I would be surprised. All right, but clearly, or for September next month, I would clearly be surprised. But you can see on this daily chart that big bar that we had right here. If I were to come into a 15-minute chart, I mean, the markets just didn't look back. You can see right here, right at 8:30 in the morning, the market started moving up, and then we just kind of hit our peak right around noontime, and then the markets just stayed all day long. Now, we could see a little bit of a settle in the price going into next week. But the directional bias tends to still be up, and I'm still sticking to my 2200 level as the higher probability move at this point in time. Okay. If we come back and we look at the Nasdaq, and let me just put everything back on the screen here so you can see the lines. You can see that we made new highs on Friday, and if I would just blow it up a little bit, move it out of here so you can see. You can see that we made new 2016 all-time highs. We went up to 2178.50 in the E-mini S&P 500 futures, and we are just a stone's breath away from hitting the center of this bar, which is around 2200. So we may see, again, some settling in price, but I do believe we're going to get up to my original target around the 2200 area. And then from that point, all bets are off. We're gonna if the economy continues to grow, very, very slowly, but still expand nonetheless. Inflation is still very low, so the Feds are going to, I think, sit on their hands, which is why we're just continuing to drive higher and higher. So we've gotten some good things out of this. If we look at the Russell has moved very strong. Look at this right here. The Russell is, you know, clearly showing some strong strength. There is no bearish divergence in this at all. And if we look at the Dow futures, the Dow over 18,468, I mean, just, you know, very strong numbers. And you can see here that I still see more upside in all of these asset classes right now. And then, of course, Nasdaq 100 futures, looking at this. Look at this. I mean, this thing is just taken off, and it was lagging behind for quite some time. And then off of these late June lows, boom, we've just sprang up, and then we just haven't looked back since. So this has been fairly solid for us. Volatility, the one thing that's got me concerned, the VIX is down very low. In fact, we made new 2016 lows on Friday. Let me just mark it. At 1118. Folks, that's very low for the VIX. Given the slowness with which the economy is moving and the lowered interest rates in the 30-year, 10-year, 5-year, and so forth, interest rates are very low, and we've got almost no inflation. So this is what happens. And by the way, we're in an earnings recession. We had even the earnings in Q2 season here are showing underwater by almost 4% quarter over quarter. So this is like the 5th quarter in a row that we've had underperforming earnings in corporate. Companies are not spending money. They're not investing. They're hiring more temporary workers because it's easier to get rid of them if the economy tanks. So, and I'm still sticking to my forecast that the markets are going to pull back 25 to 35%. I would suspect in the next 12 to 16 months is what I'm looking at. All right, probably sometime in 2017 or early 2018, we're going to get a big hit. I don't know what the trigger is going to be. We'll leave that to the TV talking heads. But that's kind of where we're seeing here. But look at volatility. When you get volatility down this low, the odds do favor volatility to move higher, not lower, all right, which would suggest some more downside action. And of course, if we look at Treasuries, Treasuries fell hard. You can see right here, if we can break the 170.28, then I'll be more interested in doing a little bit more of a shorting in the Treasuries. I am trading interest rates to the upside via TBT. If we look at TBT, I think it's a longer term trade. You can see here it's just going to slowly work its way back up again as interest rates do as well. But it's going to take longer than people think, only because there is no inflation. There's absolutely no inflation in the markets right now. So the last time the Feds raised the rates, which was this past December here in the U.S., the markets fell about 11%. So another reason why I don't think the Feds are going to do anything in next month. So we'll see how this thing plays itself out. If we look at currencies, well, strength on the strong move in the employment numbers, the dollar got stronger. Now I'm over in Europe. I like that. The euro actually came down, and you can see the euro just, moving down. I believe the euro is going to go lower, guys. Also, the British pound. I'm short the British pound in one of the funds that I'm working with, and you can see I think it's going to come down, probably take out 128, and I've got a target here of around 126 for the British pound. So I do believe that's going to go lower. Japanese yen, when Shinzo Abe came out and actually said, we're going to put more stimulus out there, the yen actually went higher. They don't believe the Japanese. And the other thing that's working that's not working, or it's working against them rather, is that the economy, the global economy is in the tank. And when that happens, the yen tends to show strength and the Nikkei tends to go down. So that's kind of what we're seeing in a flight to safety right now. From that perspective. And if we look at metals, well, gold obviously came down pretty good on Friday because of those strong numbers. You can see here we've got not quite a bearish, not an official bearish divergence, but we had a high. We didn't have another high here, but it does show that I think gold will probably come down. It may settle down even a little bit lower than this, down in the low 1300s, but I do believe longer term, and by longer term I mean the next year to two, gold is going to be back over 1,400, probably 1,500. Near term, I think it's going to be fairly choppy. I've been playing silver to the long side, and you can see silver had a huge move to the downside, 71 cents. I'm going to probably set, but I've been silver quite some time. I've been telling you guys since silver was down, or SLV was down very low. I started accumulating positions down here around 13 in silver, and then it's just been riding it all the way up. So if we come down below 1928 here, as you can see, I'll probably look at taking some profits off the table. But I do believe, again, longer term, that's going to move. Oil. Now, oil is really interesting. You can see here that we're getting a little bit of a bounce here. I don't necessarily believe this bounce is going to go very far. I don't think it's going to get much more than the 200 EMA, which is this yellow line sitting at 44.25. I do believe we may run up a little bit and come back down. Ideally, I'd like to see a test of this low here, maybe even a little bit lower before I get a little bit more bullish oil. All right, so oil, I'm more neutral to slightly bearish right now on the oil markets. And the ag markets, well, the ag, we've had 5 trades in a row successfully in soybeans. Soybeans is now, as you can see off the highs here in 2016, they're down near the lower area here. And you can see both corn is trying to find a bottom here, but it is down at the bottom. I think it can go a little bit, there's going to be a little bit of a bounce in corn and in wheat. Wheat is the same way. You can see both corn and wheat. Wheat had a little bit of a stronger bounce here, but I think the upside is going to be limited. It may roll back over and then find a bottom and then go higher, and that's when I would look to strike on those two. On the meats, we haven't played meats in a long time, but you can see meats is just really trying to find a bottom here. You can see how meats have just, all the way going all the way back to the fall of 2014. Meats have just been really working their way down. They're slowly trying to find a bottom down here. So I do believe meats, whether in this case it's feeder cattle, here it's live cattle, you can see the exact same thing. We've got these divergences on, so I think that is kind of bouncing off the lows. And even lean hogs right here. You can see this one is showing a little bit more signs of bearishness in lean hogs, but I do believe the bottom is going to be forming in these guys right there. And then if we look at the softs, because we've done some things in soft, if you look at orange juice, we've had this huge bounce. It's going to be very choppy here. I would like to see orange juice come back up, take out these highs, and then roll over. I'd be more interested to do that kind of trade from that perspective. If we look at sugar, you can see sugar is also doing the same kind of trade as orange juice. This is a 3, 4, 5 pattern. In fact, if I were to mark it and I were to just come in here and say, where could that 5-leg run? And let me just put it in here. You can see that sugar can run up to 22. I'll tell you guys, if we get up around this area, I'm going to be a big short in sugar. All right. But I want to let it run a little bit longer. And then I think we can get a better price and then look at taking some shorts in the sugar market. And then in the coffee market, you're going to see here with coffee, not quite the similar pattern of sugar. It's trying to move back up, but I think it's showing a lot more weakness in sugar. I think we can move up a little bit, but that would be another one I'd be interested in looking at a short. And then cocoa is untradeable. We're just very choppy in a very overall wider range, not going anywhere. So that's a little bit about where we're sitting, guys, right now. For our members, I will see you Sunday night. It'll be very late my time. And for those of you that are not members, I highly encourage you to come in. We're running campaigns every month in our Secret Trader. If you want to follow along, you can paper trade what I'm doing or do live trades. And, this last one we just shut down at about, I guess, about 10 or 11%. We were using a pretty good chunk of capital to do it. But these things tend to run out very nicely. So we're going to be starting another one here in another week or two. So hope to see you inside. Otherwise, members, I will see you Sunday night. Have a great weekend, everybody. Enjoy the summer months, and I will be in touch. Ciao, everyone.